day from a couple different perspectives. It is Fed Chair Walsh's first day as in a press conference. It is also the first week in 31 years that we have had over a 1% at 1% rate for the BOJ's overnight rate. And that is, just kind of the cherry on top. We are in an environment here where, as long as the dollar and the yen keep weakening together, that we are inside of this kind of risk-on event. And there, is a very concerning looking previous high that we have, it looks like, failed to break out of on the NASDAQ on the ES. And I'm going to show you here where I don't think that we can make a case that it's clear yet that those uptrends are over. And the first point that I'd like to make here is with DXY, is that the dollar is still in this downtrend. And there's a negative correlation right now against the indices. And that negative correlation is actually pretty substantial. It's a negative 0.8 and a negative 0.7 on the NASDAQ. And if the dollar weakens from these traditional short setups and falls back down into this target, well, that drags the indices higher into a new high. We make new highs of the week if the dollar makes new lows here. And then there's the bank chart. Bank is not technically broken its extension long level yet. It looks like it's under pressure, but it hasn't broken it yet. And so the financials are still in an uptrend. And then that takes us to our VIX chart. And the VIX, this is the very first day of the July contract included in the continuous contract price. And look at where the new July contract has opened up. It's inside of a traditional from last week's highs to lows. So this is very similar to last month. We were going into our expiration and the new contract highs to lows opened up. And we had opened up right inside of a traditional short. This is what it looked like. It's actually kind of fascinating that we were inside of the actual extension on the day after expiration. And what we were anticipating, just to take you back last month, 4 weeks ago, we were, I believe it was 1915. Let me make sure that that's right. We were anticipating, it was 1915. We were anticipating that the VIX had to fall at least into this full retracement and the indices would rise in this distance. And that if even the bearish case for the indices would be that they would rise until the VIX got to this level. And then if the VIX bounced, of course, the indices would potentially put in a high. But the VIX went right through it. The bullish case came to be. And so this is exactly the same type of situation here. We have a halfway back long from old contract lows to highs. And we have this distance that the July contract can travel. In the bearish case for the indices is that the VIX falls into this old contract lows to highs. And if it bounces when we get to this level, then the indices, wherever their high is, will have to pay very close attention. But what if we just continue on into the larger targets? The point is that these pullbacks that are made while the VIX is falling back down into its support are have been entries to the long trend on the indices. And so the question is where are these? This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds